In this recording, we're looking at accounting for depreciation and entering the depreciation into the financial reports or the financial statements. I'm looking in your books on page 24, and it's the example for Tins and Things Private Limited, and it's providing the following information. The machine was purchased for $33,000 including GST. Remember, the main thing we have to do with depreciation is take the GST out of the equation altogether. So the historical cost of this machine is $30,000. The depreciation rate is 30%. And what you are required to do is to create the depreciation schedule to the 30th of June 2019. You've got to record the general journal entries for depreciation. And you've got to do the ledger accounts for accumulated depreciation of machinery and depreciation expense, and also prepare the income statement and balance sheet extracts for the year ended 30 June 2019. So first of all, we're looking at our depreciation schedule, where we start the historical cost of the asset. We purchase the asset for $30,000. It's diminishing balance depreciation at a rate of 30%. So in the first year, our depreciation expense is going to be $30,000 multiplied by the 30%. $9,000 is the depreciation for the first year. Obviously, that will be the accumulated depreciation as well. And our closing written down value is going to be $30,000 minus $9,000 is $21,000. I'm sure that if you have watched the previous videos on calculating depreciation, you'll now be familiar with a depreciation schedule. We then, from the schedule, have to take the depreciation and put it into our general journal. I always like to use the word expense after the depreciation, so then I know it's an expense account. So I'm going to put $9,000 in the depreciation expense account, and I'm going to put $9,000 in the accumulated depreciation account. I now need to put this into my ledger. So I know that I must put $9,000 into my depreciation expense account, and the other account affected by the transaction is accumulated depreciation. Remember, these transactions are all taking place on the 30th of the 6th, 2019. Okay. I then have to go, obviously, to my accumulated depreciation account because that's what my ledger is telling me, my journal, I beg your pardon, and I'm going to put $9,000 on the credit side into my accumulated depreciation account. The name of the account on the other side of the equation is depreciation expense because that is where the money is coming from. And of course, my date, I'm just going to copy my date down. So there we have it entered in the accumulated depreciation and depreciation expense accounts. I've put next to accumulated depreciation that it's a negative asset. Why? Because it reduces the value of the asset on the balance sheet. On the very, very last day of the financial year, there's a few things that we have to look at doing. The ledger account has got asset accounts in it, liability accounts, owner's equity accounts, revenue and expense accounts. It's very important that we take out all the revenue and expense accounts and we put them into either the trading account or we put them into the profit and loss account. So how do you know what goes where? Well, anything that is part of the calculation of gross profit, in other words, sales less cost of goods sold, is closed off to the trading account. Anything that is part of the net profit calculations, in other words, gross profit, other revenue, and all other expenses, gets closed off to the profit and loss account. So let's look now at our ledger where we have depreciation expense and our profit and loss account. Please remember that this is just an extract of the profit and loss account. There's a lot of other things that are also going to go into this account. So if I am closing this depreciation expense account off, it's going to be depreciation expense on the credit side, isn't it? So I need to go to my general journal and I put depreciation expense on the credit side, $9,000. When I put it into the profit and loss account, okay, so I've got my $9,000 there, and that amount is going to go into my profit and loss account. So it's going to go into my profit and loss account on the debit side. So in my general journal, I'm going to put $9,000 on the debit side. I go back to my ledger and I put $9,000 on the debit side of the profit and loss account. So that's our ledger. We don't close the accumulated depreciation off. The reason why we don't is because all our asset and liability accounts and our owner's equity accounts stay open. Why do they stay open? Because they go onto the balance sheet where we have the statement of financial position. So here's our balance sheet here. We had the value of the motor vehicle, which was $30,000. We know the accumulated depreciation for that first year is $9,000. So on our balance sheet, we have the closing written down value of that asset as $21,000. Was that the same figure that we had on our depreciation schedule? Yes, it was. We also have here the extract of the financial statement for financial performance, in other words, the profit and loss account. Now remember, this is just an extract. So the start of every statement of financial performance will have sales, less cost of goods sold, giving gross profit, adding other revenue, less other expenses, and the expense of $5,000. That is where the depreciation expense sits on the statement of financial performance, and this is where accumulated depreciation sits on the statement of financial position. Remember, the statement of financial performance calculates gross profit and net profit, and the statement of financial position, or the balance sheet, tells you what the business is worth.